Hey guys, before I start this video, I just want to let you guys know that I have the full guide to this strategy in the Discord server. Click the link in the bio. It's going to be free to join for the next couple days, and I'll see you guys there. In this video, I'm going to be showing you guys how to identify inverse fair value gaps, how to utilize them, what to watch out for, and what to avoid. This strategy does use order blocks as well. It's an ICT concept. If you guys don't know what a fair value gap is or an order block, I have 2 separate videos on that on my channel in the description. So make sure you guys go watch those before you guys continue watching this. So jumping into it, what is an inverse fair value gap? An inverse fair value gap is very similar to a normal fair value gap. However, it's a red candle. So if you guys see right here, we have an example of a bullish fair value gap. I'm going to mark that in for you guys. This is actually on a green candle or blue one in this case. An inverse fair value gap is something similar to this. However, it's going to be on our red candle or black candle here. A lot of people get the idea that if a green candle is a bullish gap and we're going to long it, an inverse fair value gap has to be a bearish candle. That is completely wrong. More cases than not, an inverse fair value gap will not get respected on shorts. Inverse fair value gaps will typically break and continue pushing for the upside. In this video, we're going to be using inverse fair value gaps for bullish trades. So I'm going to go ahead and mark in the inverse fair value gap here. And then I will also be marking out an order block that we have down here using the wicks. 2 things that we find here: we find an inverse fair value gap and we also find an order block. An order block is an area where buyers or sellers like to step in to move price. You can typically find these by finding horizontal alignment of resistance. You guys can see right here in this area, we reject off of this order block multiple times. Eventually, we do have a liquidity injection. We eventually break the order block, close, and then we start bouncing off of it right here. And then we come into the order block once again after creating our inverse fair value gap. So in this case, we actually have 2 points of confluence. We have an inverse fair value gap formed. So that's going to be our first point of confluence. And then we also have an order block, a bullish order block respected. Now we are going to wait for a break of the inverse fair value gap to catch an entry on our trade. So you guys can see at this point right here, we actually end up closing and breaking the inverse fair value gap. And this is where you'd want to enter your long position, with the stop loss being subjective to you. And there you have it. This is an inverse fair value gap trade. It's going to be a bullish one. We have a bullish order block. We also have a break of structure right here for further confirmation. So that is just one example of an inverse fair value gap trade. So I'm going to show you guys another example of an inverse fair value gap trade. Before we actually create this order block, we actually created our inverse fair value gap right here. Go ahead and make this blue. So I'm going to mark out our bullish OB. And then we also have an inverse fair value gap. And in this case, it's actually unique because we have a bullish fair value gap form with us as well, which is actually further confluence. So if you have an inverse fair value gap, bullish order block, as well as a bullish fair value gap after, this trade is literally a no-brainer. Our entry could be anywhere at the break of the inverse fair value gap or retest of the bullish fair value gap. Entry will look something like this. The stop right here. And a good trimming spot would be at a break of structure here, breaking that lower high. And then we have another good TP towards the end of day. If we have an inverse fair value gap and there is no other confluence such as a bullish order block, a positive bullish, a bullish fair value gap, then I would not take that trade at all. So as long as you have 2 to 3 things that check mark, the inverse fair value gap should be an easy trade. If you guys want to trade with me, I live trade every single day. I post all my trades on the Discord server. We have a great community of 11,000 members. Click the link in my bio. It's going to be free to join for the next couple of days, and I'll see you guys there.